Can you now see my screen?
Yes, sir.
Okay. Is it the first page, Global Financial Compliance?
Yes,
Correct.
yes.
Okay. When I move the slides, if it doesn't move, just let me know.
Sure.
All right. So it'll just give another 2-3 minutes. So until others join, so we completed the compliance function chapter last week before. And do you all have any questions from that? Anything, and have you all had the opportunity to go through, because it's fairly straightforward section with 24 marks. So I think if you go through the text and also my notes, you should be able to get good marks. Any questions on that from anyone? Okay, I'll take that as a no.
Hi, Shane. Just to know now, each chapter, is there any set of questions so that we can, once we go through the chapter, we can do it so that we know like what type of questions that will come in for each chapter? I think there are about 5 chapters for the program.
Yeah,
Or
so
is it just a mock exam? We'll cover the chapters.
no, I think I will cover revision session closer to the exam. Not immediately after, but I can show you some questions, the structure at least for your reference, maybe after the both chapters are over.
Oh, okay. Okay, I think that would be, I just know it's just a request. I think that would be better so that we would know like what sort of questions that will come in the chapter, because I think then we can figure it out, like how to, read through the notes or,
Sure. So we can maybe I'll actually run through few questions just for you to understand how the questions look like. But questions in the exam could be slightly more challenging than what you see in typical mock exams or past papers, right? So, but we can do that. Maybe give a quick overview of how the questions look like.
Yeah, thanks.
Okay. All right, so let's start. We're 6 minutes past the starting time. So look, the chapter today is on managing financial crime, managing the risk of financial crime. The chapter consists of 3 main areas. So we're going to cover today the first section, which is money laundering, terrorist financing, and the standards required of firms. Then next week, we are going to cover practical implications and also policies, procedures, and control required of firms. Since we missed one class, I'm going to try and see if I can finish both sessions within next week. But if I can't, then I'll need another session and maybe take half a session to go through the remaining sections and then possibly focus on few Q&A. Hope that works. So look, moving on to our first topic. So we're looking at the concepts of money laundering and terrorist financing. Can someone tell me what is the fundamental difference between the two? Or is there a fundamental difference, or both? Can you consider both as uh, the same? What is your understanding of money laundering and terrorist financing, if I may ask?
Hi, Shade.
Yeah, go ahead. I can hear you.
Yes, this is Chalan here. So the money laundering and terrorist financing is actually two concepts. So money laundering actually, when it's come to money laundering, all times the source of funds is illegal for money laundering, right? So that's why people try to launder money. So because to conceal the origin of the funds, okay. And when it's come to terrorist financing, uh, the source not required to be illegal, the source can be also legal. So in terrorist financing, what happens is we actually funding the terrorism activities or organization or such thing. The funding could be your legally earn money, or maybe from illegal source. So I the basic difference that I explained here.
Yeah, that's the textbook explanation, right? So that is precisely the explanation I was looking for. So money laundering as a concept is basically, in simple terms, turning dirty money into clean money, right? So um, money that is acquired and that has a criminal origin, how that money gets into the financial system. Because if funds are from a criminal origin, and if you are presenting that funds for any activity, obviously someone could refuse that funds, right? So there is no use of having example drug money or money through human trafficking, etc., in that same form. And it's important for the launderers to integrate that into the financial system, right? So if you look at the process of converting this dirty money into clean money is the concept of money laundering, right? So um, then on the other hand, terrorist financing is actually when funds are being used as financial support of organizations or groups that seeks to perform terrorist acts, and also any financial transaction undertaken to move such money around the globe in order to enable terrorist attacks to be carried out. So when you look at terrorist financing, um, what comes to mind as a case study? Um, what comes to your mind?
9/11 attack.
Yeah. So as a case study, 9/11 attack was what was widely covered, and terrorist financing actually came to the limelight as a result of 9/11 attacks, right? How um, how the hijackers actually got into the US, how much funds were required. So they required about 400 to 500,000 uh, dollars. So how those funds passed through to US, about 325,000 or $350,000 were passed through the financial system. All the 19 hijackers, in fact, had bank accounts in the US. They also use foreign bank ATMs, um, money service businesses, foreign exchanges to transfer that funds. There were about 20 wire transfers completed, right? So all that happened um, in order to support that terrorist mission, right? So at that particular point, um, banks fail to have controls in place to identify this activity because whoever those terrorists appear to be legitimate, they even in fact have studied in US universities as well, right? So they've enrolled in US universities. That enrollment brings in a lot of legitimacy. And then with that legitimacy, they sort of use that legitimacy to open bank accounts as well. As such. So conceptually, there's a lot of attention on terrorist financing since the 9/11 attack, and that is a widely studied case study. You know, when we refer to terrorist financing. So again, we highlighted the difference between money laundering and terrorist financing. Money laundering, the source is always from a criminal origin. Terrorist financing, it can be from a criminal origin. It does not necessarily, even clean money can go into terrorist financing. And yeah, so we're going to move on to forms of money laundering. So we spoke about turning money acquired through criminal activity into clean, then handling proceeds of crimes such as theft, fraud, and tax evasion, handling stolen goods, being directly involved with or facilitating the laundering of criminal activity or terrorist property, criminals investing the proceeds of crime in whole range of financial products. So there is some overlap between AML, anti-money laundering provisions, and the rules designed to prevent financing of terrorist acts. And even if you look at financial institutions, there are no separate controls introduced saying this is specifically for terrorist financing, this is specifically for money laundering, right? So the controls implemented by banks are mostly alike for both terrorist financing and money laundering. It's about getting to know your customers, getting to know what they do, getting to know the nature of their employment, how do they get their source of funds, how have they acquired their source of wealth, if it's a corporate, identifying the beneficial ownership, etc. Right? So those standards would not, from a control point of view in the organization, especially banks, would differ between um money laundering and terrorist financing. So there are also two main differences to note, however, between terrorist financing and money laundering, which we discuss one. And often only small sum of monies are required to commit terrorist act, making identification and tracking more difficult. The other point was what we discussed previously, legitimate funds are used to fund terrorist activities. It does not necessarily have to be from a crime origination from a crime. So by the nature of the activity, money laundering and terrorist financing are both cross-border in nature, right? So anything that is cross-border in nature requires international cooperation and coordination, right? So that is what is really critical. So moving on to the next slide. So whilst to make sure that there are certain consistent standard applied across countries in order to tackle money laundering and terrorist financing, and also there are legislation and regulatory processes in place. So examples of this include the Financial Action Task Force, European Union directives on money laundering, standards issued by certain international bodies, and also sanctions by United Nations and EU, and also guidance issued by private sectors such as Wolfsburg of banks in relation to private banking and correspondent banking. So we are going to discuss a little bit more in detail about these organizations later on. Before that, we are going to speak about the 3 stages of money laundering. So any of you have come across the concept of money laundering, or if you're working in a bank, I'm sure you go through regular training related to money laundering. So can anyone say what the 3 stages of money laundering?
It's placement, layering, and integration.
Yep, that's correct. And so there are three stages basically in money laundering. One is placement. So placement is the stage where you introduce the dirty money into the financial system. So placement can happen in various forms. And if you look at certain very traditional way of laundering money is breaking down sums into small amounts, depositing in different branches, then opening multiple accounts in different banks and then depositing funds. So there are various traditional way we can look at banking and placement. Layering actually involves where the money is then moved around. It could be wire transfers, it could be cross-border transfers to make sure that from the placement, the you disconnect from the place of placement where the funds have now flown into. Integration is the final stage where layering has been successful, which means you cannot now trace back the proceeds to where it was originally placed or the original crime itself. Now the funds have successfully gone through the layering stage, which means at the integration stage, you can bring the funds back into the financial system, right? So in recent years, use of electronic currency has also raised a lot of interest regarding disruptive impacts of technology, but should also be considered in the light of money laundering consideration, right? So wherever you look at certain digital assets and currencies and the access to it, um, could also raise opportunities for layering and also both for layering and placement as well, right? Um, so moving on, if you look at the role of certain agencies, right? So we're going to discuss few agencies and their role in managing or tackling financial crime risk. So first is the United Nations Office of Drugs and Crime. This is basically an office that is mandated to assist member states to combat illicit drugs, crime, and terrorism. The broad objective of the global program is to strengthen the ability of member states to implement measures against money laundering and financing of terrorism, and to assist them in detecting, seizing, and confiscating illicit proceeds. So what's important in this is detecting, seizing, and confiscating illicit proceeds, right? Not every international agency is involved in detecting. Most uh, most are involved in managing the financial flows. So United Nations Office of Drugs and Crimes, they are directly involved in seizing. If it's drugs, seizing the drugs, confiscating the illicit proceeds. So they look at more broadly um, than certain other institutions. So if you look at IMF, currently much discussed topic in Sri Lanka. So it's a collaborative institution with a near universal membership because majority of the countries have membership in the IMF, right? And it's in a natural forum. It becomes a natural forum of sharing information, developing common approaches to issues, and promoting desirable policies and standards, all of which are critical to fight against money laundering and financing of terrorism. So in 2006, the IMF Executive Board confirmed the general principle that every financial sector assessment program and offshore financial sector assessment should incorporate a full AML and CFT assessment. So moving on to IMF again, so there are certain sections that is highlighted in red. That is because there is a change from the 8th to the 9th edition. And I was just told that there is a 10th edition that has come as well. So what I will do is once I complete all the sessions, whatever the changes in the 10th edition, I will run through separately with all of you. So this is an addition to the 9th edition, which is currently in place, I think, till September 2023. So in 2018, emerging areas in AML CFT space were identified to include fintech, correspondent banking, and transaction laundering. The increased demand for integrity advice and capacity development lead to the goal of at least 1 or 2 assessments per year going forward. Since 2020, IMF started participating in AML CFT assessment carried out by other assessor bodies as well. Moving on to another agency is the World Bank. So World Bank basically consists of 2 main organizations. One is the International Bank for Reconstruction and Development, and the other is International Development Association. Both IBRD and IDA are involved in supporting developing countries in case of IDA making the grants for the poorest countries. Emerging markets are increasingly becoming a venue for large-scale money laundering operations. If left unchecked, will undermine the formal financial sector. Emerging markets, can anyone say why emerging markets are susceptible to money laundering?
They have open policies. Because of that, it's easy for them to settle down launderers.
Okay, anyone else? Yeah, so if you look at that, that's one key point, right? If you look at emerging markets, they have open policies to attract investments, right? And emerging markets is also in the process of focusing a lot on infrastructure development. So infrastructure development, especially in the public sector, could lead to corruption. Corruption is a form of financial crime, right? Both bribery and corruption, corruption of public funds and bribery in order to entice government officials to award contracts in the favor of certain construction companies. So moving on, Stolen Asset Recovery Initiative of the World Bank is actually a partnership between the World Bank Group and UNODC that supports international efforts to end safe havens for corrupt funds. So these organizations and what you need to know for the exam is very specifically what is in this presentation as well as what's in the textbook. You do not need to go beyond and understand because your question is going to be limited from the text, right? So that's why I'm actually reiterating directly from the text itself. So moving on, Financial Action Task Force, I would say as an intergovernmental body, this is one of the most critical intergovernmental bodies that manages money laundering and terrorist financing, right? So the primary purpose of FATF is to develop and promote national and international policies to fight financial crime and terrorist financing. And FATF issued 40 recommendations on money laundering and also +9 recommendations on countering terrorist financing, which were combined in 2012. Initially, they had 40 +9. So you'd also recall that Sri Lanka was in the FATF grey list. So what FATF does is FATF has a standard set of policies that FATF expects as the minimum standards for countries to comply with. Then they, through their technical assessments, they check whether countries are actually complying with these regulations and they make an assessment. So Sri Lanka was added to the FATF grey list, I think around 2017, if I recall correct. And then the government as well as the regulators have to make certain changes in line with the recommendations in order to comply with the FATF recommendations. So I think we eventually came out in 2019. So as we speak, Philippines is in the FATF grey list where I'm currently based in. Dubai was recently added. Mauritius was recently added to the FATF grey list, and the most recent addition I think is Vietnam, which is also now being considered or on the process of being added to the FATF grey list. So if you look at the changes that got introduced in 2012, so 2012 FATF had major changes being introduced. They added tax crime as a predicate offense for money laundering. So in Sri Lanka, do you think tax crime is a predicate offense for money laundering?
No.
No, the
No,
answer is
it's not
no.
a predicate offense.
Yeah, so tax crimes in itself is an offense in the sense, but it's not a predicate offense for money laundering, right? So we'll discuss a little bit more on what the predicate offense means, right? Predicate offense is the underlying offense relating to money laundering where a person is being charged on. So moving back to FATF, FATF in 2012 added tax crime as a predicate offense. The extension of obligations on financial institutions to conduct enhanced due diligence on a risk basis to domestic politically exposed PEPs, introduction of more rigorous requirements in relation to information which must accompany wire transfer, the requirements for countries to establish a mechanism to record basic company information and to enable financial institutions and competent authorities to determine beneficial ownership and conduct appropriate due diligence, the introduction of new step-by-step process for the identification of beneficial ownership and control of companies as part of CDD measures. So moving on, so what does FATF do? We spoke about this very briefly. FATF sets international standards to combat money laundering and terrorist financing and provides best practice papers, guidance, including implementing risk-based approach. They have issued various guidance papers depending on the risks that they currently see or the emerging risks that they would foresee. So they also assess and monitor compliance with FATF standards and provide a list of non-cooperative countries for use by countries to help apply sorry, give me a second. This should be a typo. I'll correct that when I share the deck. So they assess and monitor compliance with FATF standards and to provide a list of non-cooperative countries to be used by other countries. How does this work? So if the moment you are listed as a grey list country, individuals coming from that country, let's say if Sri Lanka was in the FATF grey list and you want to open an account in a European bank, right? Then it's a huge challenge for a Sri Lankan national because of the FATF grey list to go and open an account in another country, right? Supposedly, if Sri Lanka permits to open accounts overseas, right? But any other country, the challenge is people view funds coming from grey listed countries gets additional scrutiny, and people or anyone trying to set up businesses who are owners of grey list. Hello. Hello.
Are you okay with that screen sharing?
I don't know. Okay. It's okay. It's okay. It's actually a typo. Okay.
Okay. Okay.
So moving on. So it becomes challenging for individual to set up businesses originating from a grey list country. So it gives a lot of scrutiny. It's until you get off the grey list, right? So FATF also conducts studies of money laundering and terrorist financing, methods, strengths, and techniques, and also responds to new emerging threats such as proliferation financing. So moving on to the next section. Again, this was added in the latest edition. So FATF recommendations are continuously reviewed and updated. Most recent amendments were recommendation 1 and 2 concerning risk assessment, the risk-based approach, and national cooperation coordination, which was done in October 2020. The amendments concern, amongst others, additional requirements regarding identification, assessment, and mitigation of possible breaches, or the evasion of proliferation financing related sanctions and information exchange between domestic agencies. Okay, so let's move on. So we spoke about predicate offense previously. So what exactly is the predicate offense? Predicate offense is the criminal offense when committed intentionally, right? Laundering of the proceeds of a crime considers criminal offense when committed intentionally, right? So examples could be, as per the United Nations Conventions Against Crime, the conversion of or transfer of property, knowing such property is the proceeds of crime for the purpose of concealing or disguising the illicit origin of the property, or helping any person who is involved in the commission of the predicate offense to evade legal consequences of his or her action. Then secondly, the concealment or disguising of the true nature, source, location, disposition, or movement of or ownership of rights with the respect to property, knowing that such property is proceeds of crime. Subject to basic concepts of its legal system, the acquisition, possession, or use of property, knowing at a time of receipt that such property is the proceeds of crime, participation in association with conspiracy to commit, attempts to commit, and aiding, abetting, facilitating, and counseling the commission of any of the offences established in accordance with this article. So, if the exam question refers to Article 23 and refers to which one of this is stated in Article 23, you should be able to understand which was referred in Article 23. So we're going through the definition of predicate offense. It's the underlying criminal offense that gives rise to the criminal proceeds, which then is subject to money laundering charge, right? So it's the underlying criminal offense, which is referred to as the predicate offense. So drug trafficking is an underlying predicate offense. Fraud is, human trafficking is, bribery and corruption, embezzlement, all that are considered as predicate offenses for financial crime. So fraud and embezzlement, I'm not going to go through in detail, but maybe embezzlement. Embezzlement is actually an act of dishonesty, appropriating or secreting assets by one or more individuals to whom such assets has been entrusted. So embezzlement means it's a type of financial fraud. So if you have a concept of a bank teller who has been assigned an amount of money on a day-to-day basis, maybe their teller balances are not every day. There is a level of cash that the teller is accountable for. Assume that teller is accountable for 100,000 in their possession. So maybe they take some funds of it during let's say during a month end, if the month end check is where you check your teller balances, after that check is done, they can take some funds, and that is actually called embezzlement, right? So if your cashier is taking funds which is under their possession, is actually a type of embezzlement. So we spoke about bribery and corruption. So bribery is a form of corruption, is giving money or something of value with the intention of influencing the behavior of the recipient. In public sector specifically, there is high risk of bribery and corruption. And corruption, on the other hand, actually involves abuse of power and may range from bribery of high foreign officials to secure some type of favorable action by foreign government. To so-called, this is called facilitating payments, that is made to the government to ensure that certain projects can be secured, right? So, and these both work hand in hand, and there is something called Transparency International, which actually assesses the perceived corruption in countries, and Sri Lanka is actually not ranked quite well. Anyone knows the ranking for Sri Lanka in the bribery Transparency International Corruption Perception Index?
37%, no? 37.
I think 37, and we are ranked, I think, what, 90?
Yeah, that's correct. Yeah.
90 out of, I mean, 90 out of about 160 countries or so. So in terms of the corruption perception index, Sri Lanka is not ranked well. And countries like New Zealand, Denmark, Finland, and few European countries are the ones that is actually ranked on the top of the lowest countries with corruption, right? All right. So before I move on to predicate offense of money laundering in Sri Lanka, can I ask a question around what are the social economic consequences of money laundering? So this is actually not in the textbook, right? Very specifically, but I want you to let me know what are the social and economic consequences of money laundering. Why is money laundering and such a big issue? Anyone? Any thoughts?
Socially, it promotes crimes within the social framework of a jurisdiction, and funds pumping in from illegal activities to the financial system facilitates more crime, more illegal activities. So it becomes a never-ending vicious cycle within the society. So basically, it helps to continue that cycle in terms of criminal activities.
Yeah, that's again a textbook answer. So thanks, Harshana, for that. I think if you look at social consequences, right? If money laundering comes as a result of drugs, human trafficking, corruption, I think I hear a lot of stories around drugs nowadays and the younger generation, the usage of drugs, right? So the moment and country becomes easier to launder proceeds, that country can attract more crime and predicate offenses where the origination of proceeds will happen, right? So there are countries that are very lenient, where the countries have very lenient tax laws, attract tax evasion, right? Where there are countries with lower rate of prosecution for money laundering cases could also attract uh, the crime in itself, right? So from social perspective, that's one aspect, and from a economic consequences, it also impacts the tax revenue, right? Some of these laundered proceeds doesn't come as tax revenue, then it impacts the GDP. It also undermines the formal financial sector, right? And so those are few socio-economic consequences of
International sanctions.
international sanctions, right? So if you look at countries like North Korea, who are very heavy in proliferation financing, and obviously sanctioned by sanctioned in by a US, UN, and many other bodies such as the EU, right? So if you, I mean, despite the fact that they circumvent those sanctions in different forms, but legitimate financial flow becomes extremely difficult. All right, so that's socio-economic consequences. Moving on to predicate offenses. Again, this is not in your text, so I'm not going to go through each and every area. So once I share the presentation, you can have a quick look through of the predicate offense. I just included that section just for your awareness. All right. Moving on to financial firms and crime, right? So we're going to now focus on financial firms and how financial firms could be exposed to crime. Ponzi schemes. Who comes to your mind first when you hear the word Ponzi schemes?
Sakwiti, right?
Yeah,
Sakwiti Ranasinghe had a similar scheme going.
yeah, that's correct. Actually, Ponzi scheme was named after someone called Charles Ponzi, but more locally, who we remember is Sakwiti and his scam, right? I think I'm not quite aware, but I think Sakwiti is out as well, right? For he would have served.
Yes. Now he's yes. At the time now he's out.
Yeah. So anyone can explain what a Ponzi scheme is and how it happens? Anyone? I'm sure you've heard Ponzi schemes, and so how it happens is actually when you are when you're being given an investment return which is not supported by an investment activity, right? So it's used to describe financial services or product that claims of an investment return that is not supported by an investment activity. The shortfall between the returns generated and those claimed is made up by using money of new investors. So let's say if you have a startup capital of, let's say, $1 million, you start off by saying, this really works in a low interest environment, right? So if the bank is paying about 5%, 6% or 8% on an FD, there is someone advertising you're going to get 15% for 3 months and attract funds in, And once you attract funds in, you then use your initial cash to repay the interest within the 3-month time period that you've set, or the person investing. Then what happens is the first few investors actually get that 15%, and then that attracts word of mouth, etc., and that attracts many other investors, right? So this goes on until there are no funds to repay the investments, and actually you will actually lose your capital, right? So you use the capital of one investor to repay interest of another without any underlying activity. So how is Ponzi schemes different from also concept called pyramid schemes? What is the difference between a Ponzi and a pyramid scheme? Any guesses? So basically, conceptually, it's the same, right? There is no underlying investment, but in a pyramid scheme, you expect anyone investing needs to attract new investors. So there is a commission based on attracting new investors. So it's not like you invest and you forget about it. You just need to invest and you need to attract new investors as well. So speaking about Ponzi schemes, in a most recent case, would be Bernie Madoff. That's the most recent Ponzi scheme. I think it was around 2010, around 2010, at least 10 years back, right? So the estimated value of that Ponzi scheme was about 65 billion, which was one of the recent known largest Ponzi schemes. So how did Bernie Madoff get exposed? His sons, who was part of the business in a different arm, they were in a trading arm, and they actually identified this, and they are the ones to report Bernie Madoff to the FBI, and then it got exposed and got investigated, and I think very recently he passed away as well. And in fact, his son, within 2 years of this incident, actually committed suicide because his entire family came under a lot of scrutiny by media, public, and as well. So it's the most recent incident of Ponzi schemes. All right. Moving on to another type of crime in financial firms is boiler room. So boiler room scams actually involves fraudsters selling customers overvalued or not worthless securities by means of intensive selling campaigns through numerous salesperson by telephone or direct mail. They will use high pressure sales tactics, modern techniques, include the use of internet bulletin boards to promote certain securities and entice buyers. So it is also another type of financial crime within a firm. Moving on, money laundering, we spoke about it. So how does that impact firms, especially banks? Banks are actually most vulnerable at the placement stage, where you can actually receive cash, and other firms such as fund managers and brokers could be used at the layering stage, where criminals are attempting to disguise the origin of dirty money by placing layers of transactions between the original deposit and the ultimate receipt of clean money. So the largest reported money laundering scam is the Danske Bank Estonian branch. It was about 229 billion, and as recently as 2-3 weeks back, 6 employees were also charged with money laundering relating to this Danske Bank Estonian branch. So what happened was non-resident accounts were used to transfer proceeds of crime without actual checks and balances at a bank level. Right? So that was the specific concern. All right, moving on to offshore trust. Again, financial firms can be exposed as a result of offshore trust. So trust in general is where assets of one person is actually donated to another person and you get a third party to manage it. So it could be used for transferring of inheritance or wealth in families. And when this happens in a different jurisdiction, and that is called an offshore trust. So offshore trust is an arrangement located in a different jurisdictions. Usually this happens for certain tax benefits, etc. Offshore trusts may also be used for the layering process of money laundering by moving monies around different accounts, breaking the proceeds down into different amounts and utilizing numbered accounts, and or offshore companies with ownership hidden by offshore trust, nominee directors and bearer shares. This can at this stage make it almost impossible to trace ownership. And if funds are then moved to offshore companies or bank accounts, the funds are separated even further from the original amounts. Offshore companies or trusts can be used to purchase property, both domestic and foreign. All right, so let's take a quick pause as of now, and we will come back at what's the time in Sri Lanka now? Is it
7:25.
Yeah, so we'll come back at 7:40. So let's continue with financial crime and firms. So moving on to another type of financial crime or crime that a firm get exposed to is a mortgage fraud. So mortgage fraud is a crime in which the intent is to materially misrepresent or omit information on the mortgage loan application to obtain a loan that is larger than you can actually obtain. So in US federal courts, mortgage fraud is prosecuted same as a wire fraud, bank fraud, and also mail fraud and money laundering, and it's a 30-year imprisonment. So in 2011, the US started to take action against a number of banks for their role in the financial crisis. Home loans were being grouped together and sold as investments. So if you look at the 2008 financial crisis, it started as a result of the housing bubble. So what happened was because banks started lending based on underlying security and not based on the creditworthiness of clients, in a sense, they were more comfortable when housing prices were going up. They were more comfortable to lend, taking housing as a security. And when the housing market crashed, and also when they have lent to individuals that could not afford, and when foreclosures happen, they could not sustain that model. And additionally, these securities, these mortgages were bundled together and sold as securities as well. So it had a ripple effect on the financial crisis. So it's not necessarily a type of mortgage fraud because it was not even from the side of the customer, but it's from the side of the firm which was initiated. But the fundamentals are not assessing the credit worthiness properly, solely relying on the underlying security than the credit worthiness of the client at the time of granting the mortgage. So moving on, again from financial firms' point of view, identification of beneficial ownership is very critical, especially if you are a bank, and this becomes really important where banks understand who are the beneficial owners. And in most banks, the customer due diligence process requires the financial institution to establish and maintain written procedures that are reasonably designed to identify and verify the beneficial owners of any legal entity customers. These procedures must be enabling the institution to identify beneficial owners of each customer at a time a new account is open, unless a customer is otherwise excluded or account is exempted. So FATF also has a separate recommendation around beneficial ownership. FATF defines what beneficial ownership is. Most regulators across the world has their own regulations and expectations relating to beneficial ownership. Moving on to cybercrime, I think post-COVID, this becomes an even bigger issue. And especially in the world that we operate now, cybercrime becomes increasingly a threat to financial firms, and not only financial firms, firms in general, right? So, what does cybercrime means? It's actually use of computers or illegal means, such as fraud, trafficking, identity theft, or violating privacy, and this then is used for financial gain, right? So, some types of crime include hacking, um, including social media and passwords, phishing, fake emails asking for security information. How many times have you got saying that you have won a lottery, or your bank account details needs to be updated? So those are all called phishing mails. Malicious software and distributed the denial of services or DDoS attacks. The scale and the complexity is wide ranging and can vary from a poorly executed email pretending to be from a bank, hoping the recipient will click on the link and leave the bank details, or to complex operations as well, right? So malware attacks, digital currencies, etc. So since the pandemic, certain studies has revealed that online retail sales have gone up by about 50%. So if you look at some of the work that we used to do physical, now it's mostly online, right? So that online presence increased the threat of cybercrime. So cybercrimes in certain regulators now are reacting to cybercrime, even though sometimes the reaction might be relatively slower than the pace of growth of cybercrime. So if you look at countries like Singapore, they actually recently introducing a new bill or a law called the Online Criminal Act, which is recently introduced, and that basically looks at strengthening the defense against cybercrime. So cybercrime is a global issue and is for a large part undertaken by email. Annual cost for 2019 was estimated to be 3.5 billion, which I'm sure has almost increased over the last 3-4 years. Like I said, through COVID, the number of occurrences as well as the costs are expected to be exponentially higher in 2020 and beyond, and largely as a result of increased vulnerabilities associated with home working during the virus, and also the access of online or the usage of online activity, which has increased as well. So all the types of cybercrime have been added to laws in many countries. The criminal justice system in most countries is not yet up to date to keep up with the severity of the crimes. So in certain instances, like for an example, in the UK, conviction rates are high, but actual penalty is low. In certain countries, the conviction rates are even low, right? So in the US, number of cybercrime continues to grow, but litigation rates do not. And penalties and convicted do not represent the severity of the crime. So these are all from a regulatory or a legislative perspective, which needs to be addressed. So moving on to another type of crime is misstatement of financial circumstances. So misstatement is a type of accounting fraud, right? So accountants say it's cooking the books or whichever term they use it. So misstatement is defined as the difference between the amount classification, presentation, or disclosure of a reported financial statement item and the amount classification, presentation, or disclosure that it is required for the item to be in accordance with the financial reporting framework. So a material misstatement of financial statement may arise when the appropriateness of selected accounting policies, the application of selected accounting policies, and the appropriateness of adequacy of disclosure of financial statements. So earnings management, you can overstate your cost to show a reduced profit so that you can pay less taxes. You can understate revenue. You cannot record cash sales as revenue, and that can be accounted for separately. And in certain instances, you would have heard and come across that people have two sets of accounts. One is for tax purposes, and the other is the actual picture as well. So, do you think financial statement misstatement happens a lot more in Sri Lanka now than it was given years back? Or do you think we have progressive legislations to avoid misstatement or encourage people to pay taxes? What's your thought around it? Anyone?
I think for professionals, tax payment has become a must.
Yeah, I think, look, if you're working for an organization and if you're an employee, your tax is in most instances deducted and paid directly by the organization, right? So mostly these are financial firms that have ways and means of sort of managing. So I think the challenge is considering in an environment that is high inflation, high taxes, the chances of misstatement is greater because people would want to really circumvent paying those taxes as much as possible, right? So tax evasion is one of the primary reasons that why people misstate. Then moving on to misstatement of financial circumstances, corporate fraud, right? So Enron Energy was actually a good example of one of the largest sort of accounting scandals. Then if you look at Lehman Brothers and Goldman Sachs, so Lehman Brothers was actually the fourth largest investment bank in the US. So they were the pioneers of mortgage-backed securities, which were sold during the 2008 financial crime, for global financial crisis, right? So Lehman and Goldman Sachs are both relating to mortgage-backed securities, right? So those were considered as corporate fraud. Corporate, we spoke a little bit about corporate governance in the previous chapter. So that's why there is a lot more focus on individual accountability of the directors, that ensuring that there's greater transparency in the financial conduct of corporates. So moving on to tax evasion and tax avoidance. So we spoke briefly on tax evasion and avoidance. Do you think both are illegal? Or do you think?
I think tax evasion is illegal and tax avoidance is not.
Yeah, that's correct, right? So tax evasion uh, is tax avoidance is usually legally permissible methods to reduce the amount of tax owed, right? This is generally achieved by claiming permissible deduction, credits, and allowances. Tax avoidance is legal and includes aspects such as transferring assets between spouses or making pension contributions in order to reduce the level of income that remains subject to income tax, right? So tax evasion, on the other hand, is illegal practice where a person, an organization, or corporation intentionally avoids paying part of their full tax liability. Examples might include not paying income tax or VAT when working for cash in hand. So we spoke about cash in hand um, and how people, when you have cash sales, some of the cash sales goes unaccounted for. And tax evasion would also arise if the capital gains made on investments were not correctly disclosed for taxation and calculation. All right. So moving on to the final section of this particular section is about dual criminality, right? So we spoke both money laundering and terrorist financing is international in nature, and it spans across cross-border. So therefore, dual criminality, extradition, and mutual legal assistance becomes really important, right? So extradition law is an amalgamation of international and domestic law that sets the structure for an individual living in one country to stand a trial in another, right? So generally, extradition is only supported in conditions where there is dual criminality. So what does dual criminality means? So if you commit, for an example sake, I'm saying if you commit a murder in one country and then you flee to another country, and uh, then that country also has to have murder as a criminal offense, right? So murder is an extreme example, which is a criminal offense in most countries, but certain other type of offenses may not be, right? So one of the most famous known uh, cases in Sri Lanka relating to extradition and related concerns is one of our former central bank governors who was in Singapore, and there was a lot of requests relating to extradition, but maybe the dual criminality criteria was not met. Then under an organization for economic cooperation and convention, each country shall, to the fullest extent possible, under its laws, relevant treaties and arrangements, provide prompt and effective legal assistance to another country for the purpose of criminal investigation, and the proceedings brought by country concerning offences within the scope of the convention, and for non-criminal proceedings within the scope of the convention brought by country against a legal person. The requested country shall inform the requesting country without delay of an additional information or documents needed to support the request for assistance, and when where requested, of the status and outcome of the request for assistance. So what you need to remember is for extradition to happen, dual criminality needs to be there. What is dual criminality is where one allegation relates to an action that constitute a crime in one country needs to be a crime in another country as well, right? And usually fullest extent support is required. So the requested country should inform the requesting country without delay all the information, documents, etc., supporting their request, right? So that's dual criminality and extradition. All right. So that's all that we are going to cover today relating to financial crime. We covered quite a lot, and what we are going to do now is let's use possibly the next half an hour to go through some of the questions relating to chapter 2, right? So there was a request previously to go through some questions. So we'll use the next possibly 30 minutes or so just to go through some questions relating to the compliance function and refresh your knowledge on what we discussed in chapter 2. Okay, before I move, there are so far any questions from what we discussed today?
So Shane, on these areas where you spoke about this misstatement of financial circumstances, what do you really need to, what do we have to, even though we go through the text, what do we have to really focus on just to know at the exam questions, like what would be?
It's look, these examples that we quote, like global financial crisis or anything, you don't have to worry about. The exam will not ask what is the most recent accounting scandal or so, right? So exam will ask only from the textbook. So whatever is included in the textbook is what you need to see. It's not going to ask for the most current updated scandal or what happened in Danske Bank, for an example. Those are all for example sake that we are using, right? It's only concepts that they will check, not the actual examples or knowledge. Okay. Share my screen. Okay, we're going to go through some questions relating to the compliance function.
Excuse me, Shane.
Yeah.
Yes, one more question. Now, in the previous slides, the PATF was there. Makes sense because it's UK based regulator. So is there any possibility to get any US related regulator questions also in the examination? For an example, like FinCEN and DFSA, this Dubai Financial Authority, and these international body related questions also can be seen in the paper, or just like UK based regulators and the regulations?
No, actually, no other additional regulatory body will be questioned other than the ones that are in the book. So your primary focus should be the textbook, right? So FinCEN and US regulators won't come in specifically for the question.
Okay, thank you.
Okay, all right. So can you see my screen?
Yeah.
So I'm not sure whether we can use the polls function. Yeah, I think we can use the polls function, right? So you're gonna have so I will launch the poll function and then you can use that to answer the question, right? So we have a few questions we can quickly go through relating to compliance function. All right, so what I'm going to do is I'm not going to read through the question. I will. Can you see the question now? Hello, can you see the question?
Yeah, Shane.
Yeah, so go through the question and I'm going to launch the poll and you can answer the question. Which of the following best describes a policy from a financial compliance perspective?
Can you read the poll? Because I think it is not there anymore because I was reading the
The poll is there, right?
can't see now because when you're reading the question that is not seen.
Yeah, I think few have answered. I'm going to end the poll. So just going to try and limit it to about 1 minute 30 seconds, right? So 4 people have answered. Uh, all right, so 2 have answered as B and majority have answered as C as the correct answer, right? So let's look at B and C. What B and C. So policy is not something provided by the governments, provided by a firm to guide staff in basic principles on the approach to be followed by management and staff, provided by a firm to give detailed guidance. So majority have picked detailed guidance, right? But the correct answer is answer B. It's detailed guidance. Can anyone recall what detailed guidance is?
Procedures.
Procedures. So detailed guidance is provided. We spoke about regulation, policy, and procedure. Policy is basic principles and the approach. Okay. All right. So moving on to, I'm going to relaunch the poll. Second question. Which of the following is a method in which firms can integrate regulatory requirements into their compliance procedures? You got only one answer so far. You probably have about 30 minutes, 30 seconds. All right, the correct answer is answer C. Clear statement of responsibilities in job description of compliance responsibilities. Only 2 have got it right out of who answered. So moving on to the third question. In preparing compliance reports, a compliance function should have access to. I think we discussed this also during class. Information limited by the scope of the inquiry. Any information all departments where compliance risk exists. Any information from all departments. Any information from all departments that does not breach client confidentiality. All right, I think I'm gonna move on to the next question. The answer is anyone, any guesses? Anyone who is confident enough of the answer to say?
Answer
Because
B.
yeah, answer B, right? Because information where compliance risk exists, right? So I think we very specifically discussed this at the class. Moving on to the next question. Compliance manual is. All right. We have different answers, but the correct answer, compliant manual, is answer C, regularly reviewed with feedback from staff, right? So agreed upfront, it's not a fixed document. It gets fixed. It gets reviewed very regularly. So moving on to the next question, I'm going to relaunch the poll. Bit of a lengthy question. The key purpose of an effective compliance function are. All right. So majority have answered, but the correct answer for this is answer B. Right, moving on. Straightforward question. Who is responsible for putting in place compliance policies and procedures? Quick answer, anyone?
Directors.
Yeah, directors and senior management. So I'm not going to waste much time on that one. Next question. Compliance risk is which of the following?
Also.
That's correct. Someone said all four. Compliance risk is actually all four. Next question. A log of minor regulatory breaches can be useful to the firm. All right, so majority have got the answer right. The correct answer is B. Next question. Which of the following is most likely approach of regulator to the monitoring of high impact firms? We spoke about high impact firms, medium impact firms, and the supervisory approach. We spoke about their supervisory approach is also risk based. What's the answer for this one? Majority have answered this incorrectly. It's selective monitoring of sample firms. Selective monitoring of sample firms within a sector is not conducted for high impact firms, right? High impact firms are coordinated through a relationship manager, and only one person has got this right. Okay, moving on to next question. An effective way of being proactive in identifying compliance risk is. Okay, I think majority have got this answer correct. The correct one is answer C, ensuring that compliance function is represented on new product committees. The keyword here is proactive in identifying compliance risks. So when you answer multiple choice questions, you always have to focus on keywords, because when a question is tricky, the keywords becomes really important, right? So proactive identifying of compliance function is the keyword, which gives the answer as answer C. How do you all find these questions? Maybe because you've not read the text book as of now, maybe you'll still find it difficult, but um, rest assured, once you read through the text, it becomes little easier. Any thoughts? How do you find this? Easy, difficult, or manageable? No?
Bit tough.
Yeah, bit tough, because compliance function, everything comes from the textbook, and it's a little, it's not difficult, but it's technical, right? So, all right, let's move on a little bit at pace. Which of the following may lead to logging of a suspicion? Correct answer for this one is answer D. When monitoring compliance by looking at samples of transactions, which are the following method would be most useful? All right, I'm going to move on. The correct answer to this one is answer B, allowing compliance direct access to the systems. Again, I think we discussed that during the class. Which of the following best reflects the Bank of International Settlements Principle 6? Yep, someone has answered A. The correct answer is banks compliance function should have sufficient resources to carry out. That's the correct answer. 15. Which of the following is not a useful method of monitoring an individual compliance with regulation, internal policies, and procedures? Tricky question. I think I'll move on. The correct answer to this one is D, training and development, because the keyword here is useful method of monitoring an individual compliance. Monitoring an individual compliance is the keyword. All right, moving on to 16. So the correct answer for this one is answer B. Majority of you answered answer A. Answer A says 1 and 2, inspection and enforcement. Again, if you focus on the keyword here is preventive measures, right? So preventive means it has to happen prior to an incident, right? So inspection is a preventive measure. When you come for inspections, then they monitor the controls, etc. Then uh, enforcement and discipline is not, right. Enforcement and discipline is post, so it's not a preventive measure. Uh, Moving on to the next question, gonna go at pace now. An employee suspects criminal activity but has no evidence. To whom should this suspicion be referred to? Again, easy one, so should not take much time. So the correct answer is answer C, the money laundering reporting officer. The compliance function discovers the following. Discovery 1. A client's trade has been executed 1 day late. Discovery 2. The suitability of the product has been assessed incorrectly before being marketed widely. Which of the following is true? We don't have answers as yet. The correct answer is answer D. Discovery 2 could lead to financial penalties from the regulator and possible loss of authorization. There was an answer for answer A. This is a systematic risk. So the key is it says a client's trade. So a single client's trade was executed 1 day late. So it doesn't indicate a systematic risk. Systematic risk should happen on an ongoing basis, impact multiple clients, etc. All right. According to the BIS principle for compliance and the compliance function in banks, what is principle 5? Right? I think whoever who answered got this right. It's the answer A, compliance function should be independent. Which of the following would be considered good practice in maintaining competence and awareness in the staff of a firm? All right, everyone has answered correctly. Gonna end the poll. Sorry, the correct answer was answer D for the previous one. Some firms classify their risks using a score. This score is least likely to incorporate which of the following? Answer is answer B, days since last tested, because we spoke about this compliance monitoring program and how it's done, financial impact, exposure frequency, and probability. So days since last tested is not one of them. A regulator performs a dawn raid on a firm. Which of the following is always true? So the correct answer is answer C. Moving on to the next question. Firm PLK has received a visit from the regulator performing a periodic risk assessment. This is most likely to be if you focus on the keywords, you should be able to answer. So the keyword is periodic risk assessment, right? So periodic risk assessment means it's a scheduled visit.
Common sense. Majority, it's common.
Yeah, if you, I mean, some of it, if you don't know the answer, you can't remember the text. You should be able to read through. I mean, given the experience of the students, I mean, this is not, this is all for working students, right? So I think there is an element of common sense you can apply if you don't know the answer. That's correct. All right. Final question. How many principles relating to compliance and the compliance function in the banking sector have been set at Basel Committee of Bank Supervision? Again, if you don't know the answer, you can apply common sense for this. If it's principles, it can be, yeah, it's 10 principles, right? So, yep, that's all the questions I have for today. And hope it gave you a level of awareness of where you stand in terms of your understanding, and you know, maybe you need to read the text. And I'm sure if you read the text and go through my notes or presentation deck, I think you should be able to easily answer majority of these questions. All right, I am going to end the session here today.
Shane, do
Eh,
you think you can share the deck which you did today, the presentation?
Yeah, presentation deck is with Himali. I've shared it already. So Himali, can you share that?
Yes,
Himali?
sir.
Yeah, so just share it with them
Okay.
today itself so that they can have access to it.
Sure, sir. I'll upload the e-learning portal. Already I gave the access for them.
All right, so I for next week, I have two options, right? So I usually do some case studies. That's for general awareness and understanding. And that's directly not relating to the program, right? So considering I missed 1 week, I have the option of skipping the case studies and sharing the case studies for you to go through at your leisure and focused on the theory, and then and follow up with some questions relating to financial crime. Or I might need another additional session if I am planning to do case studies during the class. Which one do you prefer? Maybe we can take a poll for this one as well. Case study during class and have 2 sessions. That's answer A. Or continue the theory and have questions, and that means I need an additional 1 week. Okay, it's a close fight. All right, I'll give a few more to answer. Oh, it's 5-5. Hopefully one. There are 4 more key votes waiting. Case studies next week, answer A. If it's theory only and exam sort of multiple choice questions, answer B. 3 more. I'm waiting for 3 more responses. Can you all see the poll? No, right?
I think
So I,
some chat box also answer A and B there.
okay, now I'm going to share the results. Can you see the results? It's a equal split between people saying let's do case studies. Let's focus on the theory and the questions. All right. Himali, you can be the tiebreak and say what the academy wants me to do. But look, let's focus on the theory first and maybe squeeze in one case study and try and see, because I am conscious that we missed one class. Himali, is it possible for us to repeat that class now
Yes,
or
can,
as per
sir.
this?
Yeah, next you can take one more class, sir.
Okay, then it's okay. Then we should be able to balance with case study and questions as well. So, all right, then we have 2 more sessions within the next 2 Wednesdays, and where we will focus on the theory, case studies, and few multiple choice questions. Okay, thank you. That's it from me. You all have a good rest of the week.
Thank you. You too.
Thank you, sir.
Thank you, Shane. Bye.
Thanks, Shane.